What's going on, guys? Welcome to another stream here on Friday. Finally, the week is ending. Wasn't too bad, right? It's been a bit hectic all over the place. Um, so like always, feel free to let me know in the chat what stocks you guys want to take a look at. We can take a look at them. If not, I'll probably just take a quick look at some recent news that's hitting the markets today. So let's try to let me take a look at what's happening right now. And I should be sharing screen. Yep, I am sharing screen. So first, earnings. Let's take a look at what earnings we have today. Let me just pull up. So right, yesterday we had Amazon, we had Neo, we had Twitter, Skyworks too, right? Both Twitter and Skyworks are down after reporting earnings. I think that's what I might pull out a video on. Skyworks seems pretty attractive at these levels. Neo is also down. I think the only real winner yesterday out of the big ones were Amazon. I think that stock is still up. Let me take a quick look. Amazon stock. Yeah, that one is up still 2%. I know earlier in the day was up. Earlier after reporting earnings, it was up more like 4%, but now sitting at 2% gains. Not bad. Unfortunately, it seems futures are a bit down. Right, we can see things are a bit red. So I'm guessing we're gonna have another red day today. What's going on, David Becker? How's everything? How was your day yesterday? All right. Oops. Got that. So just want to take a look at the stocks making the biggest moves right now. Twitter's down 12%, right? It's pretty crazy. I'm pretty sure very similar to what we're seeing everywhere. Just a slowdown. Yep, a slowdown in user growth. All good here. Was good enough to pass for a Thursday. Yeah, yesterday wasn't too bad, right? Just overall. That's good. Any thoughts on today? Becker. Skyworks, like I was mentioning, is down about 8% pre-market. I don't understand why. I mean, I think the outlook they gave, I was just looking at their presentation or their newsletter. Whoops. And it didn't look half bad. I think Skyworks might be one of those stocks that's giving buying opportunities for those that might want to enter this stock. Western Digital, that jumped 4.7%. The overall memory is still doing great. We had a lot of oil, I guess, too yesterday. What else did we have? Nothing too interesting. Amazon was just a killer. Texas Roadhouse gained 3%. This is one of the few, I feel, chains that has continued to done really well. What are things you really want to get into, David? Yesterday I actually made another, I think yesterday I made my weekly purchase. I bought something, a slow growth. I bought Activision yesterday. So I'm super excited about that. I used to have it when the whole correction happened. I sold it just to buy some high growth stock names. Now that I'm kind of excited with my high growth stocks names, I kind of want to enter back into like a slower grower but still profitable type company. So Activision was a play for me recently. Let's see. So yeah, Twitter's down 12%. We have Apple. Apple is still down. I mean, they did some great earnings 2 days ago and they were down, and now pre-market they're down an extra 1%. David Becker, personally, I'm trying to get out of small things that aren't making or going to make me money and get into things that will drive, that will get me this later. Oh wow, Becker. Yeah, now deciding on what I need to retire. Agree, man. Better late than never. That's the true thing. I'm pretty sure, like my parents, right? My mom just turned 50, and my dad's 52. And only recently did they really just start investing. But like I told them, better late than never. I think my mom just opened up her first account like a year ago, and my dad like 2 3 years ago. So better late than never for sure. Paying top three buys to buy right now. It all depends on what you're looking for, right? Are you looking for value stocks? Are you looking for dividend plays? Are you looking for growth stocks? I feel like there's a lot. Becker 28 right now, about to be 29 in a few months. So I am a bit more growth, more into growth investment, but I do have like my dividend plays, and I wouldn't mind looking at like heavier dividend plays. Not a place I truly focus, but one I don't mind focusing on. Payne Palantir, I feel like as a growth pick, that one has been beaten down right now, and it's looking pretty nice. I keep seeing bullish thesis on that one. I don't follow it too much, but the stock, right, it's pulled down more than 50%. Just because it's pulled down, right, I don't want to make it seem that just because it's pulled down over 50%, it means it's going to go back to those all-time highs anytime soon. But when they do see a pull down like that, it's actually down about 40%, right? But when you see a pull down like that, it eliminates a lot of the risk. So I do think eliminating a good portion of the risk can help out in long-term returns. What's going on, Josh? Have I taken a look at DM? DM stock, what is this? Desktop Metal. No, I have not. Maybe we can take a look at that one right now. Let me just answer a few questions. But let's start off the day with DM stock today. DM, come on. Desktops Metal. So we can start off with this one for the day. And let me just open this up a little bit more. Daniel, your top picks you guys are looking at. There's I mean, I've done a few videos. Pinterest looks interesting right now. A lot of things I want to say look pretty interesting. Teladoc looks interesting, right, for sure. What else? I recently got into Activision again. I wanted to get out of a few growth, not get out, but I wanted to start buying a little bit less growth and more profitable at the moment. So I just got into Activision yesterday. I used to have it, and when we saw this whole correction, I actually sold it to buy anything. Why do you choose Spotify instead of Pinterest? Oh, so the main reason, so I did choose Spotify. I'm guessing you did watch the episode, Payne. I chose Spotify over Pinterest, so Spotify also looks pretty cool right now. Spotify, so Pinterest, what it really matters, right? Pinterest really cares about monthly active users. Pinterest, if you need to go to its service, you could be a free user and you get hit with ads. That's where most of the revenue comes from Pinterest. For Spotify, even though they do have an ad service, most of the revenue comes from subscription base, from their subscription members. So both of them are kind of seeing a slowdown in monthly active users. If that happens, both Pinterest is going to see a decline in revenue from ads. Spotify, even though it is going to see is seeing like a slowdown in monthly active users, most of its revenue is coming from paid subscribers, and paid subscribers is still growing at a strong level. So I think Spotify in the long term of things seems to be better financially right now because of that reason. So I do think Spotify, this pullback was kind of unwarranted, for sure. Spotify is one that was a tier 1 stock for me in 2020. Right now it's a tier 2 stock. I'm happy with my portfolio, but my dollar cost average is about like 150 for Spotify. Still though, I still enjoy it. If I didn't have it, I would definitely enter at these prices with at least a small position, right? It's down about 30% from its all-time highs right now. Right, so Spotify, I believe it was definitely, it's I don't see why the stock should have been beaten down the way it did. Debigi, would you buy Nvidia and ASML or stay with Nvidia? You know, I haven't. I know we've looked at ASML here before. I I wouldn't put them in the same tier. Like I wouldn't mind holding both of them, Jabiki, but one I would hold more of would be Nvidia. So ASML, I would say would probably be like a mid tier 2 stock, where Nvidia for me is a tier 1 stock. I wouldn't put tier 1 in ASML. Fat Metal, what's going on? Is this the place where I can procrastinate instead of coding? Yes, for the next few 40, 50 minutes or so, next hour or so from here, this is the procrastination place. Josh, all right, yeah, for sure. I'm super excited. Their latest earnings call is on Seeking Alpha. Definitely worth taking a listen. Agree. I mean, I do think one thing investors should definitely do is listen to calls or read the transcripts, especially the Q&A section. The Q&A section is a place one can learn so much. Oh, nice. Wow. Fat Metal can't work now, Jose Hassan, for sure. So why a lot of people are in bingo? I you know, I haven't. That one has been super popular in the overall, I want to say FinTwit community. What's going on, Mobbin? Morning. This one, and by the way, guys, while you're here, make sure to hit that thumbs up. It helps so much with the YouTube algorithm. So that would help out a lot. But one thing, this one has just been super popular. Pain. I personally don't enter the geonomics world. It's not something I'm familiar with. You can see most of my picks are usually in semiconductor and tech, just because of my educational background, right? Electrical engineer. So I usually stay with what I am in, or what I understand, right? I can understand Spotify, right? It's a member or a numbers game. Things like geonomics, I feel like I need to have some form of understanding in how the background works for me to invest. But has ARK or some big players been buying this stock recently? Right, it's down a huge amount, but look, this is just a few. It's up almost 1,000%. The overall geonomics, thanks to ARKG, their geonomics ETF, a lot of these stocks have been doing amazing. Again, just not a market I'm personally in paying, just because I don't understand it. And when I don't understand a stock, I'm more likely to sell off if things go bad, if the stock price drops. But if I understand the stock and the stock price drops, I'm more willing to hold on because I believe in the long terms of company. So usually I don't buy companies I don't understand. Kevin, I live in Netherlands and they love to talk about ASML. So now I'm nice, Kevin. So Netherlands and Germany are super excited about ASML. Maybe I should really take a look at it. You know, right now, chip companies, semiconductor companies are doing pretty cool. And hello from Romania. Nice. Man, it's pretty cool to see people from all over the world. Appreciate the support. David Becker agreed. The biotech, I just think the whole biotech market always goes up and down, right? It's one of the most volatile, one that's not for the faint of heart. Mobin Neverland. Oh, nice. Wow, it's pretty cool. Fat Metal, do it, Jose. It has the biggest moat in the semiconductor world. So, I was just about to talk. The semiconductor, all these semiconductor companies. Daniel, hi from Portugal, man. You guys, I feel like I'm all over the world right now. It's pretty cool. That's actually pretty cool. Liquor with good morning from Atlanta. Finally, we got some US base. What are your thoughts on TWNK? We could take a look at at that one, and then we can take a look at Jibiki on ANET and PNW. All right, so one thing I keep going off track. So semiconductors, right? We're seeing all these semiconductor companies, Nvidia, ASML, Skyworks, all kind of hitting really high levels. The ones, because, right, the huge demand for them, right? The demand from Sweden. Oh man, this is crazy. It's pretty. I mean, it's insane how we can all just meet up together and talk about like-minded thing. YouTube is pretty cool. The internet is pretty cool. But let me go back to the semiconductor. Semiconductors, right? This whole industry is booming, especially if you're a producer of semiconductor chips. We're seeing all-time highs on most of these stocks. The ones that are really taking a hit are companies that are depending on these chips. So I think those are the ones that are giving us the biggest buying opportunity, right? I'm not saying I like Ford, but Ford is a perfect example, right? Ford, I just did a video on them, and Ford stock was down pretty big, right? It was down about, after earnings, they were down about 10%. And even though they did a great earnings, one of the reasons they saw a stock price decrease is because the chip shortage is really affecting their overall business. So I do think the companies that are being affected mainly by the chip shortages are going to be like the ones giving us buying opportunities right now. I know we were talking about Sorens, right? Sorens, someone was just mentioning it. I think it was yesterday or Wednesday. And this is one that I feel is right now, I don't know. Is it giving us the buying opportunity because of the chip shortage? This is like the smart voice for automobiles, and they're kind of entering other markets. Sorens is one I like a lot. But I do believe their quarter 1 and the estimates they're going to give for the upcoming quarters is going to be weak because of the chip shortage. So even though I do have a big position in Sorens already, it's a tier 1 stock, I am waiting right now for their earnings, and I believe their earnings might give us a better buying opportunity. At the same time, if I didn't have a position in Sorens, I would at least open up a little bit to get some skin in the game at the moment. But I do think we should start looking at companies that are being affected by the chip shortage, because this shortage is only going to last for a few, right? Even if it lasts for a year, the stock prices are going to start dipping now because they already see their guidance decrease. So like I said, right now, I want to mainly focus on those outside of the actual chip makers, even though, because I already have a good exposure on chip makers, now I want to get exposure on those being affected by the chip shortage. All right, so ASML has like 70% market share for the old DUV direct ultraviolet machines, but more importantly, ASML is the only company in the world that can create the cutting edge EU. John from Ireland. Nice. Hey, John, how's it going? And all you guys, man, I appreciate the support, and I'm happy you guys are able to make it to these streams. I guess it's better for international people for me to do the morning streams. So now I might really start thinking about doing a later stream throughout the day. That was my original plan to do two, but I haven't found the perfect time to do late night streams. Maybe better for the domestic people in the United States for me. But yeah, let's see. All right, so let's take a look at Desktop Metal. And like I said, guys, if you're here, make sure to hit that thumbs up. It helps so much with the YouTube algorithm. So who was it that wanted to take a look at DM? Josh, let's take a look. So DM stock. So DM stock is currently traded under the New York Stock Exchange as ticker DM. It's currently sitting at $14.59. From its all-time highs, the stock is down about 56% with the market cap of 3.5. So first thing, I'm gonna assume this is gonna be a high growth stock for sure. Seeing this type of pullback, seeing this type of market cap, seeing that it has no PE ratio, I am expecting this to be a high PE ratio, a high growth stock. So they design and 3D printing systems. Okay, maybe we can take a closer look at their website. But they have venture funding from investors such as Google, BMW, and Ford. John Farrell, thoughts on Sorens at the moment? Sorens, I do like it, John. I do think we might see something like we saw. I just mentioned it, you might have missed it. I do think we're going to see something like we saw for Ford. When they do their earnings are going to be good because there's just a huge demand for the product. But because of shortage in the automobile industry, and they get a lot of their revenue comes from the automobile market, and since there's going to be lower production, it means there's going to be lower revenue for Sorens. So I don't know if that's already priced in. So I'm just a little hesitant to buy a little bit more right now. I'd rather buy after their earnings to kind of to kind of see if they do pull down after their guidance, because I do think guidance for the year might be a bit weak. But at the same time, I'm still holding. It's still a tier 1 stock for me, and I'm not selling. I'm just not buying anymore and waiting for a better opportunity for my current position size. And Fat Metal, these streams start at 3 p.m. for me, so fine as a student. Ideal time would be in 3 hours. That would be 6 p.m. for mainland Europe. All right, that's around 3 hours from now. It's about 12. That's around the lunchtime. So yeah, maybe I should start a different poll to see when Monday streams might be better. And when maybe I can do an afternoon stream. Marcus, the market is rigged. It's been rigged forever. Just because it's rigged doesn't mean you can't make money, right? I'm not saying it is rigged, but if it is rigged, it's been rigged forever. What's going on, Pilot? How's it going? And people can still make money. You just have to be smart on how to make money around it. So DM, right? We got future growth. The company is expected to grow 41.9%. Who was looking at this one? Josh. So this is a hyper growth stock for sure. First thing I'm seeing, it is not profitable. Second thing, it is not positive in cash flow from operations. So right off the bat, this is a stock that I would kind of put it in my speculative play, because at the moment it's not profitable, it's not positive in cash flow from operations, but it's expected to grow at strong levels. So this is right off the bat a company I personally wouldn't invest too much in. It doesn't mean I wouldn't invest in it, I just wouldn't make it like a tier 1 stock. Maybe like a tier 3 or a very tier 2 for me. And these tier levels are pretty much just position sizing for me. If we take a look at their health, what I want them to do is be very strong in their balance sheet. I want them to have almost no debt. And that's exactly what's happening here, right? They have about $600 million in cash and short-term investments and about $10 million in debt. So pretty much strong balance sheet, right? So strong balance sheet. This is what needs to happen. If you ever look at a company that's like this, that's not profitable, that's not positive in cash flow from operations, you need to make sure their financial health is stable. Just like I like to think about companies just like looking at my personal finance, right? If I didn't have a job and I didn't have a form of income, what would be the next best thing? That I had a nice bank account, right? That would allow me to sleep late at night. Very similar to a company. If they're not making money right now, what's the next best thing? You got to make sure that they're able to survive for the next few months with the amount of cash, or the next few years with the amount of cash that they have. So I do believe, sometimes looking at companies as looking as your own personal finance can really help you. See how you're feeling about a company. So what else can we take a look at from them? Let's just see what they do. DM Desktop Metal. Investors Relations. Thoughts on Tesla and Netflix? You know, Netflix, I mean, very similar to what we're seeing right now. And I think this is the continuation. How we saw it with Twitter, how we saw it with Pinterest. Just a slowdown. We even saw it with Teladoc, right? Anson, a slowdown in subscribers and a slowdown in monthly users. 2020 was such a great year for these stocks. They were. For all those stocks, they got a lot of new members, they got a lot of new subscribers. So 2020 was a good one for them. They did mention that because of that strong growth in 2020, 2021 was going to be a weak one for them. That's what we're seeing. As long-term investors, I do think 2021 will be slow until we start seeing that growth picking up. So to me right now, those companies that have pulled back because of subscriber counts, because of monthly active users, are giving us a buying opportunity if we believe that 2021 is just a slowdown because of 2020. Will 2022 be a better year? So it's more of thinking of the long-term basis of a company. So Netflix, I mean, I do believe Netflix for 2022 could be another strong year for them. So stuff like right now could be giving us buying opportunity. But at the same time, I don't think we're going to see much movement from these stocks like Netflix until we see better results from their better guidance from them. So I just want to take a quick look at Desktop Metal, just see what they're hitting. So their product portfolio, it seems like they have a lot of different printers of all different sizes. That's pretty cool. They have, wow. And I'm pretty sure they have different metals, right? Desktop metal website. They not metals, but they are their own to the product lines that they hit. So right, they have the hardware, which are all the printers. They have their software size. They have different materials as well. So they're pretty much a full stop shop material library from stainless steel to copper, AG, fiberglass, carbon fiber. So this, I personally, Josh, am not too much into the 3D printing market right now. Like I mentioned, we're seeing 3D printing market. I think this is still very, very early on. We can see it from here. I personally wouldn't mind investing in 3D market once they start being at least closer to being positive in cash flow from operations. So right now, these are stocks that I believe will be very volatile in the next few years, but these are investments that are long term. They're going to be volatile within the next 2 years, so you might get great returns in short term, but the real answer is going to be once they start becoming profitable and positive in cash flow from operations. That's crazy, yeah. So I mean, just the overall market, right? It's also not only the company's fundamentals, right? The company's fundamentals, and that's the only thing I can really look at right now, Josh. Because if not, we'll be looking at one company every hour or so. But just understanding where that market is in, like how much is the 3D printing market growing right now, and is right now the prime time for it, or is still or still we are we still early? I did mention it yesterday. I think virtual reality, for example, virtual reality for Sony, the VR PS4 came out in like 2016, 2017. The first Oculus Rift for Facebook also came out around that same time. Even though they came out during that same time, doesn't mean the consumer was ready. Now we're seeing Oculus 2. We're seeing Facebook being a bit more aggressive. So even though they came out to the consumer about 4 years ago, I don't believe they were great buys. Now that the consumer is ready for it, I feel like it's a better time to start looking at these VR and AR companies. Right. So just because a product is out doesn't mean the consumer is ready for the product. So what was the next stock? I know someone mentioned something else. I forget. So feel free to let me know again on the comments. Or Jibiki, I think it was Jibiki. No, it was Liquored before. Very true. Similar to EV. Yes, very true. That's the electric vehicle takeoff, whatever companies, right? So TWNK. Let's take a look at TWNK. But yeah, Josh, very similar to that one, right? I would say maybe I would say maybe the 3D printing. I would put the 3D printing a lot closer to becoming ready to consumer compared to the EVTO, the takeoff long way. I forget what it was actually stand for. But yeah, kind of similar concept. The 3D printing, I think we're gonna get maybe in like the next two years or so, it'll start becoming a more known thing, right? When in companies I used to work in, 3D printers were becoming more normal. When I first started working at where I'm at right now, we only had about one 3D printer. I think now we're sitting at like 4 or 5 3D printers. And it's crazy how just the overall expansion is coming around there. All right, TWNK with Linker, Hostess brands. Oh, nice. We're getting for some reason, Twinkie are these? Man, now you made me hungry, Liquor. It's bad, all right. That's Lala. We want to take a look at AMD. All right, we can take a look at that one for sure. Hostess for some. I'm hungry now, even though I'm not hungry for sugary sweets or stuff like this. But now you guys made me hungry. First thing I want to say, I thought this would have been a bigger company. Only a market cap of $2 billion. That's pretty insane. So this is Hostess brand. It's traded under the NASDAQ as ticker TWNK. It's down 1.6% from its, let's take a look, from it's up big, right? It's up, actually no, 26% in the past year. That's still great returns. From its 52-week high, the stock is down about 2%. All right, not too bad. They reported earnings, it seems. a day ago. No, on May 17th, they are gonna report earnings. So let's learn a little bit about them. Let me just close out some of these stuff. TWNK. Hostess brand. So first thing, future growth. This is a slow growth company, right? 3.1%. Personally, not something I would enjoy. I personally would want something that has that type of growth to pay me some form of dividend, but they're not paying me any dividends, so that's kind of weak. I wish they would have. If not, I would have expected at least higher growth. They are profitable, right? They are positive in cash flow from operations, so fundamentally they look okay. Let's take a quick look at their financial health. Financially, they are a bit leveraged, right? They have more debt than they do cash, but that's okay. It's okay to be leveraged because they are profitable, because they are positive in cash flow from operations. Let's take a quick look at their most recent earnings, which were last quarter. And let's just see, Q4 of 2020. So this was February 24th, so just a few months ago. Iconic brands, their adjusted net revenue is up 9.7% compounded annual growth rate for the past 3 years. So it's actually not a slow grower either. When looking, oh, excuse me, let me get a quick drink, guys. When looking at just at adjusted net revenue, right, it's not that bad. This is, I wonder what they're considered adjusted net revenue. Their adjusted EBITDA is also growing at strong levels. What else can we see about them? Yeah, Jabiki, give me your top one. Which one would you like to take a look at? ANAT or PayNW? All right, we already saw net revenue grew 18.1%. What else can we see? Adjusted EBITDAs are also growing. Full year, strong market position, point of sales, their market share. Federico Melli, Mercado Libre. That's one I like a lot. We can definitely take a look at that one too. They haven't reported earnings yet. I just want to see what. Yo, I mean, I don't think there's much to see here right now. Who was it? Liquor. So liquor, right? This is a slower one, right? It's definitely one of those boring, quiet stocks. It's super boring, especially because if you take a look at GAAP numbers, their future growth is expected to be pretty low. But if you take a look at non-GAAP numbers and if you take a look at adjusted revenue, their adjusted revenue rates are actually not that bad in forms of the past 3 years, right? So this is one of those stocks I personally wouldn't own. They're profitable. They are positive in cash flow from operations. I could see this being a company that you buy right now, and in the future, they start to pay some form of dividend. But just not a stock I personally would like to own based on this, right? 3.1%, I feel like there's better returns in the market. But it all depends. Maybe you might be too heavy in growth stocks. If I was too heavy in growth stocks, it might be something to slow me down a bit. This could make the list of further digging into, especially the potential of them being able to pay a dividend in the future. I'm surprised they don't right now. So Jabiki, did you decide between ANET or PNW? If not, let me just Arista Network. $24 billion. They are the company designs and sells multi-layer network switches to deliver software-defined networking solutions for large data center. Pretty good. All right, that one's pretty good. Let me take a look at PANW. I can see that market growing, right? Palo Alto Networks. It's an American national cybersecurity company with headquarters in Santa Clara, California. Its core products are platforms that include advanced firewall and cloud-based offerings that extend those firewalls to cover other aspects of security. Do you know what's your highest dividend yield stock, Jose? No, I don't. I really don't. maybe whatever Microsoft pays. I think that's probably like my biggest one. Whatever Microsoft's dividend yield? ANET. First, Jabiki, both of these markets seem pretty cool. I would actually be interested in both of these companies and learning more about them. So actually, let's just do a quick. Then Microsoft, yeah, I think Microsoft is maybe Tencent. Then does Tencent? I wouldn't, and it's not that I'm against dividend. I wouldn't mind probably maybe in the future might start buying a little more dividend plays. Just at the market, I wouldn't mind expanding into other ones, right? So let's take a quick look. Both of these are in cool markets, GPK. So I'm actually going to look at both of them. Just a quick overview. Let's just do them super fast. So we took a look at ANET. ANET, what they do is they sell products to data centers that deal with the networking side. Pretty bullish in that market. Let's see if analysts are also similar way. So this is currently sitting under the New York Stock Exchange. It's Arista Network as ticker ANET, and it has a market cap of $24.6 billion. It has a future growth of about 10.7%, so not the fastest growing, but not a slow grower either, especially since they are profitable and they are positive in cash flow from operations. So I am liking that a lot right now. If we take a look at their financial health, man, their financial health looks amazing. Jupiki, I feel like you really understand what I like. They're in the market I'm really bullish on, right? Data centers for sure. They're providing solutions for data centers. Maybe I have to dig a little deeper, but they have plenty of cash, no debt to their name at the moment, and they don't pay dividend. That's okay, right? Because they're growing at some decent levels, and they also have positive earnings and positive cash flow. So Jupiki, overall, fundamentally, this is one I'm liking a lot. I wouldn't mind looking at this a little bit more. Federico, C is a tier 1 stock for me. It's one of my biggest position sizes, and it's one that's going to continue to be there. All right, so I like ANET. I want to look at them a little bit more, Chibiki. Next, let's take a quick look at, what was the other one? PANW. So PANW, right, it seems to be a cybersecurity platform. Again, just because fundamentals look good doesn't mean the overall company is good. We have to understand a little bit more about the products, understand a little bit more about what they do. But obviously we can't do that right now, right? If not, we wouldn't be able to go through the list of all the looks here. So right now, what I just want to take a look at is their fundamentals. And the ones that really interest me, the ones that show me that they're looking good, I wouldn't mind taking a longer deep, maybe in a future episode. So we're taking a look at Palo Alto Networks in the cybersecurity future, right? First thing I'm seeing, 15.1% revenue growth for the next 3 to 5 years. So this is what I consider a growth stock. They're not profitable, but look at that. They're super positive in cash flow from operations. So I'm already liking this. Because they're not profitable, but are positive in cash flow from operations, I could be a bit lenient on their balance sheet. But I don't think I could be this lenient. Actually, no, it's not that bad. They have $3.2 billion in cash and $3.1 billion in debt. 1-to-1 base, almost a 1-to-1 ratio of cash to debt. They are super positive in cash flow from operations, so I'm not worried about them paying their debt. But it's not something I would like to see. Right now, it seems the other one we looked at, ANET, is if I was to pick one that I would want to look at further on, I think it would be ANET, just because it was fundamentally in a better place. But this debt, right? This debt could be due in a long time from now. So we would also have to check when is this debt due. If it's due 5 years from now, it's probably almost non-existent. Now let me just take a quick look at ownership. Institutions own most of it. And let me just do ownerships of ANET. Ownership, individual insiders own a big portion. This is actually pretty bullish, right? The overall chairman and co-founder still own almost 16% of the business. And this is a company that has a market cap of about $25 billion. So ANET is definitely one I want to look a little bit more into, Japiki. Thanks for bringing that one up. All right. So next we have Kevin. Kevin wants to take a look at Upwork. Upwork is one I enjoy, both as a consumer. I've done a few freelancing jobs, and Upwork is one of the most. It's the product we use the most. So Upwork is good for that reason. for the overall business. Upwork, let's take a quick look at it. Let's see. So Liquor, this is, I want to say what I'm using right now. This is called Simply Wall Street. Simply Wall Street is one that I use for just very quick analysis, super quick, right? We can see I can look at a company in like 10 minutes and do that. But that's not the extent to it. Then what I end up liking is I use this one, Lazy FA. And Lazy FA is one I use to look at historical numbers. So let's take a quick look at, let's do Upwork, since we were looking at Upwork. So right now, obviously, right, I can only do the super fast one, but then I like using Lazy FA. And all of these that I use, they're super cheap. Obviously, they're paid. But they're super cheap in my opinion. This one is like $12 a month. And this one can give me, look, it gives me historical revenue growth, right? I can see Upwork revenue in 2020 grew 24%. In 2019 grew 18%. In 2018, it grew 25%. So I like taking a look at future historical. So I use Lazy FA, I use Simply Wall Street. Then the other things is very important to look at companies' investors presentation. Investors presentations, I feel, share a lot of the information. The investors website, take a look at recent earnings calls and multiple things. Right here, I can look at trailing 12 months margins for Upwork, right? I can see not much improvement. So there's a lot of things I look at. And maybe I'll drop videos on that soon. I used to have a Patreon account, and in my Patreon account, I shared how I normally looked at stocks. I kind of closed that Patreon right now just to mainly focus on my YouTube videos. But maybe I might bring those videos in some other place so people can find them. Yeah, so let's take a look at Upwork. So for those that are not familiar with Upwork, it's very similar to Fiverr. Freelancers can go find jobs. People who are looking for freelancers can go and find people to work for them. And there's all types. Fiverr, I feel, is more international based, and I've used it to create a lot of like my YouTube stuff. I think Upwork, from just personal experience, Upwork is more professional based. I see like I see bigger companies using it to really get some form of employees for long-term positions. Where Fiverr, I see it more as people just looking for like a one-time thing. So Upwork right now, we can see the stock price from 52-week high is down about 18% since March. The stock hasn't really moved, right? It's been volatile, but it hasn't really moved from where it's at. Let's take a look at future growth. This company right now. Kevin, should you be worried with Upwork next week that the guidance might be similar to Pinterest? See, so I think Upwork and Pinterest are in two different markets, right? So I don't understand. I wouldn't see how Pinterest guidance would be something that might affect Upwork, right? Because Pinterest depends on monthly active users for advertisement. Upwork depends on how many people are requesting jobs and how many people are looking for freelance jobs. There could be 2 case scenario. Now with things reopening again, there can be businesses that are looking for a quick employee for a few contract jobs. So we might see an increase in Upwork. Another thing that we might see is since things are opening back up, people are probably having better jobs and not freelancing as much. So I think it can go either way. I can see both scenarios, right? That now that businesses are opening back up, they might be hiring freelance people to kind of continue that growth. Or now that things are opening back up, people have a more stable job, so they're freelancing yet less. So Upwork is going to make less revenue because a good portion of Upwork's revenue is the fee collected from the transactions that a company pays their freelancer. So I do think it can actually go either way, Kevin. But we can see Upwork right now expected to grow 20% on average for the next 3 to 5 years. Another thing is they're not positive in earnings, but they are positive in cash flow from operations. So that's a big plus. If we take a look at their financial health, they have almost no debt and they have a strong cash position. So they have about $170 million in cash and they have about $10 million in debt. So strong. Fundamentally, I really like Upwork. And let me just say, I do have a position on them. Even if I didn't, I feel I would be saying the same thing. Next, if we take a look at ownership, individual insiders own about 9%, general public owns about 26%, and institutions own 54%. Upwork is one at these levels I wouldn't mind adding into, but this stock price has seen a huge increase for the year, right? 57% in the past 12 months. So because of this gain, if I would get skin in the game if I didn't go have an Upwork, but I don't know if I would open up with a big position. It's one that I would dollar cost average over time. So Kevin, I hope you enjoyed that and hope it helped a little bit. So Lala, what AMD, right? Amazing. I think their earnings were one of the better earnings I've seen in some time. Unfortunately, the stock price, didn't like. Investors liked it for like a few hours and then they sold off. I think that was a mistake. I think that was a mistake. I think AMD, the way their earnings happen today, I do believe this year they can break new all-time highs in the next 12 months. AMD is one I'm super excited about. If we take a look at their growth, right, they released new chips. And again, you can see probably the companies that I have higher convictions in are the ones I really understand. Semiconductors. I studied a lot about semiconductors for my degrees, right? So semiconductors are usually the companies I really understand, and those are the ones I can talk about nonstop. Future growth, right? 12.2% on average. I feel like this might be a bit conservative on number growth. They are profitable. They are positive in cash flow from operations. They have a strong balance sheet. They've got good products coming out. They're increasing their overall exposure in the AMD in the data center market. They're seeing huge boost in the notebook market as well. So AMD for me, even though it is not a tier 1 stock, it has a position size in my portfolio like a tier 1 stock. I think AMD is about 7 to 8% of my portfolio. Very similar to Nvidia. So those two alone make up a good portion of my thing. Super bullish in AMD. I want to say a big downfall right now for AMD could be Nvidia. Nvidia with the new CPU market, because let me tell you this, even though AMD does great, they're not touching Nvidia when it comes to the GPU market, especially the GPU market in the data center realm. They're not touching Nvidia there, and I'm pretty sure we're gonna see Nvidia mention that again on their earnings call. Nvidia is now entering the data center CPU market. If their technology for the CPU is to that similar levels of their GPU market, I think it could be really bad news for AMD and Nvidia. So I do think that is probably the biggest risk right now. The biggest risk for AMD is not Intel, it's Nvidia. But AMD also has that new acquisition with Xilinx, and Xilinx is going to bring them new products. It's going to bring them into the FPGA market. The FPGA market is one that is doing amazing right now, especially in the defense market. In the defense, companies like Lockheed, companies like General Dynamics, those are really moving on to FPGA protocols market. So AMD has some goodness in it, badness in it. I'm not selling. I have a big position in it. I'm not buying right now though, because I have a big position. If I didn't, I would be buying AMD at these levels. So hopefully that helped. Let's see, what else do we have? Federico, do you want to take a look at C or do you want to take a look at Melly? Let me know. Shopify. Oh man, Shopify is killing it. What stocks? Oh wow, the stock market opened already. I didn't even notice yet. And guys, while you're here, make sure to hit that thumbs up. It really helps the channel. It supports a lot, and I definitely need as much support as I can get. So let's see what's actually trending real quick. Twitter is still trending. It's down about 12% after earnings. What else do we have? Neo. Wow, Neo was down a lot after earnings, and it seems to have made a crazy pull up. That is insane. Look at that for Neo. Neo is pretty hot right now, and now it's up 1.1%. Wow. Lala, appreciate the support. Thank you. It means a lot. Because of stuff like that, it allows me to continue to do this. Amazon is um, trending up 1.1%. It sucks about Amazon, right? They had great earnings, but they're only up 1%. At least they're keeping some of their earnings right now. Now let's take a look. I want to see Fiverr Finvis. I want to take out the overall maps. Now, Lala, anytime you come, I'll make sure to look at your stocks first. Appreciate the support. It really does mean a lot. So markets are still kind of flat. I wanted to look at maps actually. Michael Costa, you're in Pub M now. Did I see a dip? So overall market seems to be quiet, right? It's not super red. We have Texan actually. Texas Instrument down 2%. What else do we have? Ed, appreciate. I think this is probably it. Ed, I don't think I have anything else. Ed, appreciate the support, man. It means a lot. Hope you have a good day in Cali today. You're up pretty early. I mean, I feel like you're always up early. Let's see what else can we. I wanted to take a look at my stocks real quick. So let me see how my portfolio is doing. All right, so I don't have too much green today. Everything's pretty quiet. I do have some red. STNE, right? Stone, FinTech is down. Unfortunately, Datadog is down. AMD is down also 1%. But you know, I don't follow much technical, guys, but a few technical things that I do like. I like to keep it very, very simple. Moving averages, right? Especially my 50 moving average. This really helps me see if things are overextended. I like to buy when things are sitting like this, right? Closer to that green and closer to the yellow line. When things are closer to the yellow line, I believe a nice amount of the risk has been eliminated. Just because things are overextended doesn't mean... Liquor, I mean, appreciate you guys, man. I'm about to go buy me some breakfast today. Especially if I get so hungry after these streams. You guys, I appreciate it, man. I definitely appreciate the support, guys. But like I was saying, right? We can see, right? I take a look at 3 days. 3 days is at the preferred time. It kind of eliminates a lot of the noise. This is, let me take a quick look just to make sure I'm not giving BS. This is the green is 20-day EMA, the yellow is 50-day EMA, and the red is 200 EMA, and this is on a 3-day basis. I like to buy stocks when they're closer to that 50-day EMA in the 3-day basis. That's when I feel a lot of the risk has been eliminated. Just because a stock is above this, like I wouldn't be opposed to buying a stock here. It just means there is a higher risk of a pull down. So over here at places when stocks are overextended, I am more conservative on my buying positions. When things are here, I'm a lot more heavier on my buying positions. And if things ever get here, this is when I'm super, super heavy. One of the perfect examples I have is probably Unity for me. So Unity for a long time, right? It's not obviously because of the way it's going. I bought during these uptrends, right? So during these uptrends for Unity, I saw it was overextended, but I still wanted to get exposure into Unity. So I saw it was overextended, so I would buy little bit by little bit. But once we saw this correction, that's when I got in a bit heavier. So it's always good. I believe it's good to get skin in the game, but when things really go down, that's when you get the whole damn body in the game. Stone, right? Stone is there, right? Good pick right now. I agree, Michael Costa. FinTech exposure in Brazil. If we take a look at the 3-day from I was mentioning, right? I've been buying at these levels when it's been overextended. I don't mind. And now we've seen a crazy pullback. I believe a lot of the risk has been taken out. Just because the risk has been taken out, it doesn't mean that there's more risk, that there's still more risk available, but just the percentage of that risk has been eliminated. So Stone, I want to take a look at their earnings pretty soon. I'll probably do a video on them now, Michael, because they definitely look pretty good right now. So I might have missed some with all the excitement that you guys gave me. What stocks do you guys want to take a look at? I probably have like 2 more stocks. 2 more stocks before I go get some breakfast. But I'll probably just go get cereal from downstairs. Let's see. Coupon. You want to take a look at AJ? Coupon. Man, I wish my boy Big Buck was here. I have to start streaming later time so he can also show up. And while you guys are here, make sure to hit that thumbs up. It really, really helps. I mean, I already got plenty of support for today's episode, but that final thumbs up, it really, really helps out. All right, AJ, I don't know if you recently watched my portfolio, my videos. I have done a video on Coupon recently. Let me just go to your channel. Wow, we have 25 people watching today. I'm pretty excited. Thank you guys. Appreciate the support. So I did do an episode on them, AJ. Let's see, when did I do them? You can just put CPNG. 3 weeks ago. So 3 weeks ago, I did on Coupon. I don't think much has changed from there, AJ. So if you haven't, this will probably be a full analyst that I have on the company. That's what I have first on the company. But let's just do a quick overview for you right now. So CPNG. For those that are not familiar, this is a very strong e-commerce business in South Korea. That's the only place they're really hitting right now, but they're a dominant player there, right? Future growth, they have 20% future expected revenue growth, super bullish there. Analysts are super bullish. They're not profitable, but they are achieving positive in cash flow from operations. I do think what they have is pretty cool, and I do mention some of the risk in it, AJ. Like I said, I'll be more refreshed in that video, so definitely check it out. But overall, strong future growth, strong. They are expected to be positive in They are positive in cash flow from operations right now. If we take a look at their balance sheet, they have more cash than they do debt. So overall, Coupon is pretty good. Yeah, so Coupon, if you like the foreign Amazons, for sure, but I feel like they're just very, they're really just hitting that type of e-commerce and delivery system, and they're really trying to expand and improve it there before they expand into other countries, if they ever have any intentions of expanding or outside of there. But I personally, I have such a big, even though they're not hitting the same countries, I would enjoy having C in my portfolio over Coupon right now. Where C is a tier 1 stock for me, I feel like portfolio wise, they might move the same way. And I feel like someone on my Discord channel kind of mentioned that, and that's where I kind of got that idea. Might have been RizFizz. But I do agree with that concept that Coupon and C might move at similar levels. I enjoy C a little bit more right now, so I'm in C mainly right now. And maybe if I see a pull down on Coupon or the overall e-commerce market, I wouldn't mind diversifying a bit with it. But overall, strong future growth, decent balance sheet. Michael, yes, I kind of read that they might that there are some rumors that they might expand into Japan, and it would be a huge play, right? Expanding into, especially since they have such a strong grasp on their. I think an important thing a company needs to do is master what they do first. So they've kind of mastered this overall e-commerce platform method. So now that they master it, they'll be able to take what they learned from there and put it and search other countries that they can do a similar style with there, right? Because their method is super, it's within a niche, right? They kind of only focus in South Korea, right? Where their centers are around, what was it, over 70% of the population. Jabiki, so how does one support your channel? I mean, you can add applauds, Jabiki. I always feel like, so I know if you're watching on YouTube, you can do like applauds, and you can like either ask a questions. I forget what it's called. However, Lala, Ed, and Liquor just did, which is an applaud method, I think, or a super method. Those are or I have like a membership here on YouTube as well. And those would probably be the best ways to support the channel, Jabiki. Other ways is make sure to hit non-monetary ways. Make sure to always hit that thumbs up. The thumbs up helps so much in all my videos. You comment as well. Even if you just say hi, Jose, on the comment in any of my videos, that is 100% a strong way to support the channel. Super heat next to the emoji. I've never like I'm new to here. I'm open, so thank you, appreciate it. It's called super heat. Okay. Uh, oh, super chat, Mobin. Thank you. Few pods I have listened to said it's very similar to Amazon. Expect to do very well. CEO is smart. On pods that everybody wanted and wished that they had money at Amazon early, and this is one of those. David Becker on Coupon. The only thing, right, is right, and that's pretty true, right? So people, right, Coupon right now is only focused in one country. I'm pretty sure when Amazon started, it was only focused in the United States. So I think a lot of people are kind of giving us are kind of not looking at Coupon because they don't believe it will expand into other countries. Could that possibly be true? Yes. Could it? But could they also expand into other countries? And if they do, it's a whole new breeding ground for revenue. So again, very similar how you mentioned, right? The only thing is this is already what, a $40 billion company. Let's see, CPNG stock. Right, it's already at a $72 billion market cap. So people might feel like it's too late for them, but hey, I don't have right now. C is killing it, man. I'm super happy. C gave us a good buying opportunity here at 200 levels. I know a lot of people on our Discord channel were buying, and like I said, if you guys, the Discord channel is free. Most of the stuff that I actually have here is free, guys, for my podcast. So make sure to join that Discord channel. We have a lot of great investors. I don't know. Let me just post that up real quick. And let me give myself a view. So if you guys are not in the Discord group, here we go. Make sure to join. If you guys have questions, that's usually where I answer. Obviously, I can't answer right away because I'm usually making YouTube videos. But I try to answer as soon as I can. David Becker, yeah, Twitch. I mean, it's crazy, right? I was just getting. I think I'm getting better traction here, David Becker, on YouTube. If I may be honest, but maybe I might try Twitch at nighttime again just to see how it's working. Maybe I might do one maybe YouTube in the morning, Twitch at night. I still haven't decided. I got some thinking to do on how that might work. Fat Metal, take care. Have to go. Actually, guys, same here. I am done for. Well, I gotta go and work on some videos. I appreciate it, guys. I definitely appreciate the support. Liquor, thank you so much. Ed, appreciate it. Lala, appreciate it. You guys really made my day today. It really does mean a lot. But yeah, guys, feel free to let me know. Post on the comments here. Go to my Discord channel. Give me ideas on what videos you guys want to take a look at. But I'll see you guys on Monday. Monday, I will be streaming again. Mondays, every day from 9 o'clock to 10 o'clock Eastern time. I stream. If you guys want me to take a look at stocks, that's what I'm here for. But remember, none of this is advice. I am just some random dude on YouTube. So take care, guys. And again, thank you so much. Hope everybody has a good day and hope everybody has a good weekend as well. Enjoy time with the family. If you're here in the East Coast, it seems like we're going to have a great weather. So make sure to spend time outside and send me pictures of all the food you guys barbecue if you guys do any barbecuing.